If I told you that you could pay less tax and that the government could give you £1,000 each year just for saving your money, you probably think I was joking, right? Well, I'm not. I'm not. Very serious. As a doctor, dentist, nurse, physiotherapist, or healthcare professional, this is something you definitely need to know, because I can't count the number of times I meet doctors or healthcare professionals who said, I wish someone told me this early. You could be paying too much in taxes and missing out the money that you're perfectly legally entitled to. And it's summarized in 3 key letters: ISA, popularly known as ISAC, which just stands for Individual Savings Accounts. Now, ISAs or individual savings accounts are often overlooked by many doctors and healthcare professionals, but they're actually powerful tools in financial planning. It can be your key to tax efficient investing, tax efficient saving, and even much more interesting, you could get an extra £1,000 every year if you're using the lifetime ISAC, which I'm going to explain. Now, in this video, we're going to break down the 4 types of ISA, why I think you cannot ignore the third type, especially if you're nearing 40, if you're in your late 30s. I'm going to also tell you why you need to pay attention to the stock and shares ISA and the different types of ISAs and how they can help you make your money work even harder than you do as a medic. Now, if you're new to this channel or if you stumbled across this video and you're wondering what's going on, welcome to Moneywise Doctor. Here we share financial insights for doctors, healthcare professionals, dentists, nurses, name it. The goal is to help you to make smarter financial decisions and to avoid costly financial mistakes that can affect you in the future. So essentially, we want to help you to take charge of your financial future. I just want to take a minute to thank you for what you've done. Yes, you watching this channel. Now, let me tell you what it is. So this channel has grown at an amazing rate. It has grown at an amazing rate from 0 to over 1,400 subscribers just within 4 months of launching it. Now, this is beyond my wildest imagination. And when we launched a few months ago, I thought it might take us a couple of years, maybe 3 years, to even cross the 1,000 mark. So thank you. However, something really fascinating has come to my notice and I thought I should share it with you. I've come to see from our YouTube analytics, from our numbers from the back end, that 70% of you who watch this channel regularly and listen to the Moneywise Doctor podcast are yet to hit that subscribe button, that precious subscribe button on our YouTube channel. You see, when I first made this call a few weeks ago, it was about 75%. So thanks to you, the number has dropped from 75 to 70 just over the past few weeks, and I'm grateful. Well, our target is to get to 50%. If we can get 50% of the regular watchers subscribed, that would be fantastic. And I want to speak to the other 70%. While I thank the 30% who have already subscribed, to the other 70%, my question is, why haven't you subscribed? Tell me in the comments. So you see, this channel is a journey of financial empowerment for doctors, dentists, and healthcare professionals, and your support means everything to us. We're glad that you're on this journey with us, but it will mean the world to me if you will hit the subscribe button. So I'm here to ask just a small favor, that will cost you nothing actually. Subscribing to the Moneywise Doctor podcast on YouTube helps us immensely. It helps us to scale up, it helps us to be able to bring in expert guests and more interesting people, and helps us to enhance the quality of our production. And overall, this will make a bigger and a better channel for you, providing you with financial education that will help you build a stronger financial future as a medic and help you to avoid making costly financial mistakes. So, if you've watched our channel before or read our blog, or if you found value in our episodes, or you've listened to the podcast, and if you like what you're watching right now, please, can you hit the subscribe button? Go ahead, smash the subscribe button. It's a simple click for you, but it makes a huge difference for us. Thank you so much for considering this, and I promise to ensure that everything we do here at Moneywise Doctor not only continues to get better, but we'll also continue to add more and more value to you. So thank you for watching, and now let's jump back to this episode. Now let's get back to ISAs. There are four kinds of ISAs. These are tax protected accounts that you can help you save on taxes. I think we're just going to list the four. There's a cash ISA, there's a lifetime ISA, there's stock and shares ISA, and there's also the innovative ISA. First of all, the innovative financial ISA is not commonly used by doctors and healthcare professionals, so I'm not going to spend too much time on that. But we'll start with the cash ISA. So the cash ISA is essentially a savings account that gives you an interest, and your interest is tax protected. So if you, for instance, you put in £10,000 into the account, or let's say £1,000, and you get an interest of 5%, you're going to get pounds on it. And you're not taxed on it. I think it's not a lot, but every little helps. So that's where I'll recommend putting stuff like an emergency fund or money you need to reach quickly. Now, number two is my favorite, is the stock and shares ISA. I think I'd look at it as the gateway to tax efficient investing. This is by far my best as an investor. Any investment returns you make with money you invested through the stock and shares ISA, whether it's dividends, whether it's capital gains, capital appreciation, is all tax free. This means that you could potentially save several thousands of pounds, if not tens of thousands of pounds, depending on how much you invest on taxes. For instance, we were fortunate last year to have made 74.9% returns on my investment portfolio. And because it was invested through a stock and shares ISA, there was no taxes on it. So thanks, UK government. Now I'll give you an example. For instance, if you invested £10,000 into a stock and shares ISA, invested into a company or fund, even if you made a profit of £15,000, normally you should have paid tax on that. But because you invested through the stock and shares ISA, there is no tax on that. That's totally legally fine. Again, this is not financial advice and legal advice. I'm sharing my own experience. Well, if you don't seem impressed on the fact that you can save that amount of taxes with a stock and shares ISA, you probably haven't paid capital gains tax or don't understand how it works. Let me tell you. Now, capital gains tax is a tax on the profit you make when you sell or dispose of an asset, especially if it has gone up in value. It's a gain, if it's a tax you pay if you make a gain, not the amount of money you receive. I'll give you an example. For example, if you bought stocks for £5,000 and sold them later for £25,000, whoop, excellent gain. Your gain is 25,000 minus 5,000, and your gain at that point is £20,000. So you need to pay tax on that £20,000. The same thing for those who buy houses and flip them. If you buy art or painting, as long as there's a higher value at the end of the day when you're selling it, you due capital tax gains. Of course, there are some exceptions, but I'm talking in general. So capital gains tax could vary, but you could pay as high as 28%, depending on whether you're a higher taxpayer or a basic taxpayer. So the ISAs actually protect you from taxes when you make a gain. Of course, if you're investing, there's also a risk of loss, but when you lose, you obviously don't pay any tax. I think stock and shares ISA is really quite important for NHS healthcare professionals, doctors, dentists, nurses. You have a long-term investment horizon. Stock and shares ISA can form a crucial part of your retirement planning. The key obviously is to balance the risk and ensure a well-diversified investment portfolio. In my own case, I use Free Trade. So Free Trade is a fantastic platform. It's an app I use for my stock and shares ISA. Free Trade does offer a zero commission, simple and easy to use platform for trading. So I found it quite easy and intuitive to use, and it makes sense for me. Since it's not complicated, I can log in and execute my trade. And more importantly, there's no commission on it. As a special offer, if you use my link, I'm going to put my referral link for Free Trade in the description notes. If you use it, you're going to get one free share worth anywhere between £10 to £100, and I'm going to get one free share as well. You're welcome. Now, the next ISA, you should get excited about it, especially if you're a first-time home buyer or you're just about to turn 40. If you're 39, then you want to act quickly, especially if you haven't bought your first house. They're called lifetime ISAs, or LISA or LISA. So it's for UK residents who are less than 40 years. I've come across a lot of doctors and nurses, healthcare professionals who said, I wish someone told me earlier on, I would have done something about it. Now, if you get the LISA offers a 25% government bonus on contributions up to £4,000 per year. What this means is that you can save money into this account for either buying your first house or for your retirement, and the government will match whatever you put into the account. They'll match it 25%. So if you can put up to the maximum £4,000, you're going to get £1,000. But remember, the maximum house price you can buy with using a lifetime ISA is £450,000. So for those of us that live down in the south, or you live in London, that means you have to find a house less than 450,000 if you want to use the lifetime ISA. Excellent. Now there's the fourth ISA, which I call the Innovative Finance ISA. I don't tend to dwell too much on it because it might not be relevant for you. If you're a regular doctor or healthcare professional, you're not involved in any fancy business. It's more of peer-to-peer lending, and it's suitable for those seeking high returns and willing to take more risk. However, they're not covered by the Financial Services Compensation Scheme, so FSCS doesn't cover it. So there's a greater risk of losing your investment. There you go. That's the four types of ISAs. A lot of time people mix them up together. There are different types, and I'm going to look at the next step will be, now you know about them, what's the best way to combine the ISAs to get the best tax savings? I'll give you my own experience and my own example. Of course, this is not financial advice. Now, the annual ISA allowance per year is £20,000. So all the ISAs, you can't put more than £20,000. Specifically for LISA or lifetime ISA, the maximum you can put in is £4,000 to get the government bonus up to the maximum of £1,000 per year. So a strategy that I've used that you may find useful is, first of all, to max out my lifetime ISA, get the £4,000 in and get that £1,000 bonus. Then I split the rest of the £20,000, which would be £16,000 now, between the various ISAs. For example, you could decide to put £6,000 in a cash ISA as your emergency fund. That's your saving. That's the money you can fall back on if you don't have any income for the next 3 months, depending on what your expense is. And then I could decide to put £10,000 in the stock and shares ISA. So that's 6,000 in cash ISA, 10,000 in stock and shares ISA, and 4,000 in lifetime ISA. Of course, you obviously will do what works for you, what makes sense for you. You can use a combination of either of them or just use one. It all depends on what you're going for. But there are a few key things to remember about an ISA. Before you jump out, don't get too excited. Let's get this one nailed down. The first one I've already mentioned is that the current maximum is £20,000 for this tax year. It has been the same since it came out. And you also must be 16 or over in age to get a cash ISA. For stock and shares ISA, you need to be a little bit older. You need to be 18 years of age and above. While for lifetime ISA is more of an age limit of 40. So if you've crossed 40 years, you can't get the lifetime ISA. In addition to all of that, you also need to be a resident in the UK. You need to be living in the UK or be a crown servant. So for example, if you're in diplomatic service or you're overseas military, civil service, or if your spouse is in civil service, basically you're a crown servant living abroad. Now, despite a lot of information being out there about ISAs and talk about it, blogged about it, we still get a lot of questions from doctors, nurses, dentists, healthcare professionals who are confused about it. And I'm going to address the commonest ones. Number one is, can I have a separate lifetime ISA from my spouse if we are buying the same house? The answer is a resounding yes. So for a couple, you can have two separate accounts and get the maximum of £2,000 government bonus per year. I've got examples where this has happened quite well. A typical example I remember is a surgical registrar who had his lifetime ISA account for 4 years, and the wife had hers as well. Obviously, over the course of 4 years, they got a joint £8,000 extra bonus, which went into the deposit of buying their first home. So that's fantastic. 8,000, that's not money to be sneezed at for most doctors. Now, the second one, the lifetime ISA versus pension, which one is better? I get this question quite a lot. But now what I can explain to you is that comparing lifetime ISA and the NHS pension is like comparing apples and oranges. They are completely different things. They're quite useful for planning your retirement, but they're different. While the NHS pension is a defined benefit pension, which means it promises to pay you an increasing pension in retirement until the end of your life, and potentially your spouse's life as well if you die first. It's not a pot of money for you to manage by yourself. It's funded out of general taxation when it's due. General taxation, that's me and you. Yeah, that's what it means. While you can access your NHS pension early, you might end up getting less because it's going to be paid out for a longer period of time. It offers a guaranteed income stream in retirement, which you may be taxed on. Most likely you're taxed on because you didn't pay tax when you were contributing into the pension. So this is the NHS pension. But on the other hand, the lifetime ISA is more like, I say, a savings product. It's a pot of money that you can, at the end of your work time, you can decide to invest it or just live from it. You can access it when you're 60. You can withdraw from it as you need, or just leave it in its tax efficient wrapper, because that's why I see ISAs as tax efficient wrappers. However, if you plan to use it as a source of income in retirement, you need to consider factors like your investment strategy, risk tolerance, withdrawal rate, all those sorts of stuff to see if it will last. And that should be something you should be discussing with a qualified financial advisor, especially one who is a specialist with dealing with doctors. We're not going to go into the nitty-gritty of taxes about ISAs and ISAs, but I think you get the general gist. They are not quite the same, the NHS pension and the ISA. In essence, they offer different things altogether, but they can all be part of your toolkit, because I look at it as having several options for getting an income in retirement. You want to be able to, you have your life insurance, you have your income protection, you have your NHS pension, and they're all very different things altogether. So understanding them properly, just as understanding the different types of ISAs, is really quite important. Right, so there are quite a few other questions that come around ISAs, and we've answered a lot of them on MoneyWiseDoctor.com. If you want to go over and have a look, you can be able to check all that in details. Now, there's another question that keeps coming up, and one of it came during our January Ask Me Anything seminar. It asks, what happens if I move abroad? For instance, if I decided I wanted to go work in Canada or Dubai or, fancy place, and you open an ISA in the UK, then you move abroad. Well, if you move abroad, you cannot contribute into the ISA after the tax year that you move abroad, unless you're a crown employee. However, you can keep your ISA open and still get UK tax relief on the money held in it. So you won't be able to put more money, but you can leave it open even if you're moving abroad, and you can still be getting that tax relief. Again, remember, if you wanted to close it, it's still yours. But moving abroad, you won't be able to contribute anymore. All right, now another one. ISA versus life insurance. Do I need both? Again, these are different things serving different purposes. You need to understand this. ISAs and life insurance, they serve different purposes. One, you can use your ISA as a saving or investment product. You can use it for tax efficient savings and investment. Life insurance, on the other hand, provides financial protection for your loved ones in the event of death. It's essential to have both. I think so. This is my own opinion. As part of comprehensive financial planning. Again, if you need to discuss this in detail, talk to a specialist medical financial advisor. Now, as a parent, can I open an ISA for my child? No, you cannot, especially if they are less than 18. However, you can open a junior ISA, which allows you to save or invest on behalf of your child tax-free. The annual allowance for junior ISAs is a bit less than ISAs, and it's £9,000. Right, there you have it. This is a summary of ISAs. In summary, ISAs are powerful tools for doctors, dentists, nurses, healthcare professionals, especially if you're in the NHS. It can help you to save and invest tax efficiently. By understanding the different types of ISAs and how they work, how you can combine them, how you can use it to make your money work best for you, you can take control of your financial future and achieve your financial goals, whether it's early retirement or to have an extra bit of money in retirement. It can help you to fast track, especially having that extra layer of financial cover. Now, tell me in the comments, do you have an ISA? Do you have a lifetime ISA? Do you think ISAs make sense, or do you think it's a little rubbish? Do you have questions around ISAs? Drop them in the comments and I'll respond in as much detail as possible. All right, thank you then. Cheers. Until next week till we drop another video. Bye bye.